Hello and welcome to the Talk Diaries with me, Tanya Beckett. It's great to have your company. There is one massive story at the moment, and it is affecting so many aspects of our lives that it's impossible to stay away from it. As we record this, in the Middle East, there is no resolution of the conflict between the US and Israel on one hand and Iran on the other. And what that means is that the Strait of Hormuz is still effectively closed. Now, as we know, a fifth of the world's oil flows through that strait. So it's already having an impact on inflation. We're barely able to count the cost of lives, impact on people, and the destruction that has been caused. But as we know, economics are important, and I often feel defensive when I talk about economics when there is a conflict going on. But the fact is, quite often they underlie political unrest and can be the cause of conflict. So it's impossible to avoid talking about them. And so I feel it is important to talk about some inflation figures that came out a few days ago. We are finding that inflation is filtering through to the US economy. Now, this will be true of many economies, but I'm using the US as an example, and I'll explain why in a moment. US inflation soared in March, up 0.9% in the space of 1 month. So that's 2.3% over the year. Now, if you strip out energy and also food, and you get to what's called core inflation, the figures are much more modest, so 2.6% over the year. But inflation in the US hasn't really been past 3% since the summer of 2024, and it was coming down after the impact that Russia's invasion of Ukraine had on prices as well. But we're going to talk through with Eduardo Escalante, who is a research assistant professor at the Free Market Institute and assistant professor of economics at the Norris Vincent College of Business at Angelo State University in Texas. Eduardo, have I got that all right? It seems that you're quite a busy man.
That's right, but it's always a pleasure to be with you, and especially when we had the opportunity to talk about these topics. I think they're very important.
It is important, isn't it? And it's, as I say, it's very difficult talking about these things when lives are being lost, homes are being destroyed. But often they seed the next conflict. We know quite often that unrest is caused by economic circumstances, and Iran was a very good case in point. But the question now is, could it cause the same sort of effect in the United States? So Donald Trump, the president, has said or tried to imply that the US is insulated from oil prices going up. So this is what's causing it, really, is oil prices going up. There are other factors too linked to the Strait of Hormuz, but the fact is that oil prices are probably top of the list. President Trump has said that the US is a net oil exporter, so therefore it won't be affected. Not true, is it, Eduardo?
Well, no, and I think it's um, it's a good starting point if we look at Venezuela, because I think that's where the whole thing started. Right, there was a momentum, I believe, after the successful operation in Venezuela to remove the leader, to remove Nicolas Maduro from Venezuela. And I think, encouraged by that success, the administration miscalculated their actions against Iran. Indeed, as you mentioned, what happened was that, the Strait of Hormuz was blocked. And with that, there was a decrease in the supply of oil. And even when the US is a net exporter of petroleum products, what happens is that the world equilibrium achieved this point at which the world price it just increases, and that end up affecting the US, even when we are one of the main or a net exporter of oil. So I think Americans are feeling those effects right now every day at the pump.
Well, indeed, because as you've pointed out there, the price of oil is set internationally. It's a global price in dollars. So it's affected not only by the supply or lack thereof of oil, but also the price of the dollar. So Americans are as affected from that point of view as anybody else. Now, the question of the oil physically arriving in the United States, I suppose, is a different one, isn't it?
Yes, I mean the oil. The United States can still probably try to do something. And I think President Trump is struggling to try to mitigate the effect of the what just happened, but they can only buy time. I believe, right? They may just release some reserves. Maybe he can pressure the domestic producers, but overall, it's very difficult to replace um, almost the 10% of the oil supply has been affected by what's happening in Iran. Um, how is it that we can deal with that and that we can somehow go back to the prices before the conflict? That's a very hard question and very hard thing to do.
And also, it's worth pointing out that the oil price is not simply a reflection of demand and supply. There's a lot of speculation built in there as well. So, quite often, we will see the oil price go up, and this can happen in the financial markets anywhere, actually, can't it? It will go up, and then when there is a perception that a solution is in sight, then it will start to move down. And I suppose what's really interesting about it is how dependent we are on oil, because if it's already feeding through to inflation in the United States, that suggests we're still very dependent on oil.
Well, that's one of the wonderful things about prices, I think. Prices are a mechanism of information. And what they do is that they even provide information about the future, right? The traders are pricing out currently oil with the expectations of what they may happen. So if they may expect that maybe even worse disruptions will occur over the future, that gets incorporated into the current prices. And what is going to happen is that you may observe that we have an increase in prices today with the expectation that over the future there will be some scarcity. And by then, well, we will be able to release probably more oil to the market, trying to reduce the prices then. So traders and the people that buy and sell oil have every incentive to be right about this expectation. So I think that's one of the issues why we see that the prices are going up. Is not only a disruption in the supply, but also is pricing out the expectations of future disruptions.
Right. And so you've hinted at this, but there are things called strategic reserves which can be released into the market, and that can help manage the situation a little, can't it? But I'm not entirely sure to what extent.
No, not so much. What happened right now is that there is almost a 10%, right, affection in the oil supply. I think it was 100 millions of barrels that are produced by day, and what
Yeah.
happens is it was almost 10 millions were disrupted in this case. So, what the reserves, which I think is a great thing that we were able to manage these reserves and set it up this way. But I think they just mitigate briefly what is happening with the conflict. I don't think they can do anything else but just buying time so that we can get a negotiation going and maybe eventually try to find a solution to this problem.
Do you think that it's surprising how quickly this is all fed through to inflation? I mean, I was talking about the figure when you strip out energy and food. It's clearly oil that is causing the problem here, the oil price that is causing the problem. It's really immediate, isn't it, when it comes to prices?
Well, partially yes. If you remove the part that when you look at prices and you remove the effect of the oil shocks, the core inflation is not that high.
Mm.
Milton Friedman used to say that ultimately, inflation is always and everywhere a monetary phenomenon. So I don't think the whole thing responds to the oil shock. The increases in inflation and prices that we have seen, the very recent reports, they document and they incorporate, I think, a little bit of these shocks. But I don't think it's the whole story there. Maybe that is a concern for the future president of the Fed, um, and also for the decisions that they're going to take ahead, because it seems to be that there are some pressures there that they don't seem to be entirely because of the oil shock. And now one of the problems is that people adjust to also the expectation that prices may go up over the future. So what we may be seeing is if people expect that the prices are going to continue going up, maybe they would just rush to try to spend the money that they have, which
Mm.
actually will increase prices even more.
Yeah.
So that's one of the main issues that we have, I think, in the US, right? Consumers are constantly um, seeing that the prices are going up with groceries, with fuel, with gasoline. And if they are, they don't need to see the CPI reports, right? They just need to see the signs in the gas station. And when they do that, what's going to happen is that, but they're going to say like, well, things are going up. And if they have that expectation, that is just keeps pushing prices up. So that is one of the issues I think that we have in the United States. I don't think it's entirely the effect of the oil shocks, but, the news may play a role in influencing that behavior.
But as you say, consumers immediately see the gas tank costing more to fill up. But the reality is that ultimately these higher energy prices feed through not just in heating your home and so on and filling up your car, in every aspect of life, because everything needs to be delivered. Many things need to be made. So many things require energy. So if those prices are not going up now, and we've said, once you strip out energy prices, the core inflation is not bad, but there comes a point at which it will start to rise because of the higher oil prices, surely.
Yeah, I mean, prices, when it comes to oil, what happens is that economists call this oil has this inelastic demand. So that means that people are not very sensitive to the change in price. Prices may be going up and people still need to go every day to work, every day to school. So they keep using oil and gasoline. But if they cannot change that pattern that much, what they do is that they start looking for substitutes for the oil consumption, right? So sometimes they have to say, well, probably I'm just going to consume less on something else, consume less on clothing, consume less on food. So what's going to happen is that the effects of increasing oil prices will just extend to other areas. And if people have the expectation probably that at some point the prices of oil are going to go up, then maybe they will start reacting a little bit more to the change in prices in oil. But at this point, they may be just trying to allocate resources in a different way so that they can save some money, given that now prices for oil are increasing, right? Because they cannot reduce the consumption that much. So that's one of the particular issues of the increases in the oil prices, right? That's why those shocks historically have affected the United States. Even now, when the United States is a net exporter, right? It's not totally insulated from this problem.
So what you mean is that people are forced to spend on gasoline and they just cut back elsewhere. So it affects the economy through that mechanism.
Yeah, that's one of the main mechanisms, I think, that we will see that is happening, right? So we see that this is taking place in that way. I think it's very hard for them to change the pattern, right? They keep spending on gasoline. So what they will do is that they will just start spending on something else, or stop spending on something else so that they can keep paying their fuel and gasoline. They need to still work. So that's one of the main incentives of how this is extending over the economy.
Okay, so I said that this was politically very relevant. The reality is that Donald Trump has some midterm elections coming up. Maybe you'd like to explain the relationship between cost of living and inflation and the midterm elections.
Well, it's not looking good. I think at this point we may have a house that is going to be probably the house is going to become Democrat again.
Mhm.
Democratic parties may be taking the house. Um, um,
But so that's not
I
looking
I
good
don't
for him, but it's looking good for them, in other words.
well, I'm not gonna. I think I mentioned this before, but I'm not gonna. I don't think it's a totally bad thing that the president becomes a little unpopular in the United States, especially with some of their actions. And I'm talking only about economic actions, and not mentioning those that may be even more unpopular when it comes to other topics, right? So I think that may even be beneficial for the U.S. overall, that we have some sort of political balance, especially given the circumstances. But indeed, I think that is why the current administration has a pressure in trying to solve and find a solution to this issue. But I just don't see how that's going to happen. I don't know how. One of the problems is that the administration doesn't have a clear goal when it comes to Iran. Right? What is the goal that we had there? Was it like regime change? It doesn't seem that is the case anymore, right? That we
I think
have the same
if
person.
you believe what you read in the New York Times and about the meeting on the February the 11th that took place between Netanyahu and Trump, and others, of course, were present, it appeared to be that they thought that the regime would fall quite quickly, and then it would be putty in their hands, and that's the miscalculation. So therefore, the issue of the Strait of Hormuz would never come up. That looks to be what they thought. I mean, that's a gigantic miscalculation if that's the case. People in the Foreign Office in the UK that I've spoken to would say to you, we've been looking at this question of Iran for many, many years, and the reason that we wouldn't move against Iran would be because of the Strait of Hormuz. So it brings me to the question that people say that Donald Trump, the president, is very astute when it comes to economics and markets and finances. It makes me wonder. What do you think? You're an economist.
N- um, well, I also mentioned this, right? So trying to understand what is what the president wants, what's what their deep needs, their deep intentions. It's something that I gave up a while ago. It's very hard to interpret what is actually what the president is trying to do. Um, at this point, what I can see is that he tries to maximize power and relevance. Um, I, I I don't know how impatient he may become on this matter. Um, One of the things that I observe in this conflict is that it's very hard to leave the conflict claiming some sort of victory, right? At this point, it seems that now the goal is trying to free the Strait of Hormuz that was actually open before we attack Iran.
Mhm.
So is that going to be the goal? What actually Iranians are demanding is also very unlikely that the U.S. will grant some sort of compensations. I don't know how that compensation is going to work. The U.S. is going to compensate those things that it destroy. It's very unlikely that it would happen too. And so, given that there is not a clear solution on that, or a clear goal that the U.S. may claim, I think it's very unlikely that this conflict is going to end up soon. And I think Iranians know that. Iranians know that the President
Well, they
Trump
can
has a
afford to pay for time, can't they?
Yeah, 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 and
Trump is running out
I
of
think
time,
I think
and
that's the main strategy, right? They may say like we just have to keep extending this, and then the president will lose power and popularity, and then he just get weaker on their actions, on the actions that he can take.
it's not possible really to predict what will happen to oil prices, is it? And it's quite difficult to predict what's going to happen to inflation. But one thing we haven't talked about is that this problem is not limited to oil. It affects other commodities that come out of the Strait of Hormuz. We talked about helium, which is um, found alongside natural gas. Natural gas itself, all of the economies in the region as well, Qatar, Saudi Arabia, and so on, Oman, to name but a few. But it's by no means limited to oil. That's the problem. I mean, one could argue that this is different from COVID, in many many ways, but it's also different from Russia's invasion of Ukraine because it is within the gift of both parties to try to end this and to be should we say, pragmatic about it at an economic level if they so choose. So it is slightly different. Do you think that is why that there is a sort of slightly sanguine approach to it, despite the enormity, really, of what is happening in commodity terms? There seems to be a slightly sanguine response in the financial markets, and I'm wondering if that is why that there is an underlying thinking that somewhere, somehow, the pragmatism, the economic pragmatism, will prevail.
Well, um, I think prices are indeed predicting something, right? The fact that we have high prices in oil right now. They are predicting that we may have even a more drastic disruption over the future. That's why prices tend to be up right now. So the market is actually already predicting that things may go worse before they get better.
Mm.
And um, I don't know if everybody has an incentive in economically in which they would say like, look, we actually need to um, get an agreement here. Probably that's one of the tools that the U.S. can still find a way to do that if they can pressure somehow China by limiting the oil that they receive somehow. I think that there was something able that they can do that in the conflict. What is particular about this case is that the Strait of Hormuz is one of the routes that is actually very difficult to replace. If you look at all the strategic passages around the war, the Strait of Hormuz is the only one in which it doesn't have many alternative options.
Mm.
Any other passage or straits around the war, all right, these important trade routes, they may be um, easily replaced, all right, but this one is very difficult. And I think we may even feel the effects for a longer time because right now I think many of the traders and people involved in or people that actually gets their living facilitated by this strait are having that the expectation that eventually the Iran can do this again, and if they do that again, we are going to be severely affected. So we may find some other routes and alternatives so we can confront this over the future.
Yep.
And that is very inefficient, right? Because that's an spending and resources on time and money that all these companies and industries are using in trying to prevent this over the future. Right? We actually want them to use those resources in something else and something more productive. But now we are just going to confront a world that is going to be much poorer than what it would be because all these companies are allocating resources into preventing something that they were not concerned before. So,
Sure, but is it not the case that it's anyway part of a broader trend that countries want to become more self-reliant? Supply chains have got shorter, and really it plays into the way that people are thinking that they cannot be exposed to geopolitical events. And so we are just becoming more independent. Is it not part of that same strand of thinking?
well, I'm actually, I mean, politically, maybe that the case, but what I see with the world economy is that it has been surprisingly very adaptive and flexible. Right? If you look
Mm.
at the case of Russia, when we block the country from anything, from potential transactions, the whole world economy was able to readapt and find alternative suppliers and set up quickly different supply chains, right? So I think it quickly, adapt to these changes in trade. The same thing happened with tariffs, right? There was another disruption to the global trade, but actually um, the world economy also was again very flexible to find alternative
Mm.
suppliers, alternative supply chains. So I actually was not expecting that so much. You would expect that there would be very large disruptions, but what we have seen so far is that economy is very much able to find alternatives to these pressures. Maybe this is one of the more severe and difficult because, as I said, it happens that geographically it's very hard to find um, an alternative route to the Strait of Hormuz. But if economic agents have the expectation that this will continue over time, I'm sure they will find some ways in which they will just find alternatives, right? And that will imply that we are, as I said, much poorer than what we would be, because what is going to happen is that we are just allocating resources in something that is not efficient, not that productive, and we wouldn't have to do that if this would have happened, right?
Right. So, in the course of this year, the effect on the US economy is going to be what and through what mechanism? You've talked already about the fact that if people are spending more on one thing, filling up the gas tank, they may not be spending on other things. That suggests to me slower growth. So you could have a situation where inflation could be higher and growth could be slower. Could you?
Well, yeah, that would be the most problematic scenario indeed, because that may open the doors to talk about a potential recession, right? People just there is no growth, probably there won't be jobs, and if there are no jobs and prices are high, that is uh, the typical nightmare on an economy, right? I don't think we will still see something like that. I think we are still very excited about the potential productivity of AI, so that may be offsetting some of these effects. Um, so I don't see that will happen soon. I do see that probably there will be some pressures for inflation. Um, Still, I think some other countries are more affected by the oil shock than the
For sure.
U.S. So I don't think the U.S. will still confront some sort of lower economic growth, right? But yeah, probably there will be some pressures for inflation. The problem with inflation is also that um, prices do not increase equally for everybody. And that is one of the issues, right? It disrupts the coordination of economic agents because the prices may be going up in different sectors more than in others. And that is one of the problems that we have with inflation, right? So yes, it may affect growth because the coordination of economic agents is distorted, and that definitely will have an effect on economic growth. How much? Of course, that's very difficult to tell, but it's a force that is opposing to the excitement of AI and investment that we have seen in recent years.
Mm. Okay. So you're not, it feels like you are very sanguine about all of this. Is it because you think that economies have been shown recently to adapt very rapidly? Or is it because you feel that somehow a solution is at hand in the Middle East? It's difficult for me to work out which, or maybe a combination of both.
Well, I thought you were going to say that probably it's because I'm an economist and we're used to this sometimes dismal descriptions of the situation. Um, I am a confident always of the United States over the longer run. I'm also surprisingly, pleased with how the world economy has been reacting to these different shocks. Um, uh, Maybe also, as I mentioned, it's not a totally bad thing to have to see some decrease in the popularity of President Trump. And I think that's ultimately that's one of the things that prevails when people vote, right? People react very much um, to prices and how the economy is doing the year of the election. That's also what calls my attention when I think about this whole conflict. How is it that the current administration decided to take the risk, specifically in this year when they have elections coming? It was, I think, a terrible miscalculation politically. Is going to be very costly, I think.
Which brings me to my final point, and that is when we see economic disruption like this, do people what level of awareness is there of this in the United States? Do people talk about it a great deal? We don't have a sense of that, because the reason I say that is because I think what's been brought into this is the idea of America's reputation. And I don't know whether Americans think a lot about their international reputation, but the US dollar is a very important part of the global economy. And the fact that America needs to borrow debt is a very important part of the global economy. And it's pretty important for America too. Is it possible that this this conflict in the Middle East, started by America and Israel simultaneously, of course, will affect the reputation of America such that investors will be turned off?
Well, I would separate those two things, economically and politically. Right? Economically, I think we see that I think there are two opposing effects when it comes to the treasuries, right? The government treasuries. Some investors may if they expect that inflation may be growing up, maybe they will just expect greater returns from government treasuries, right? So that will probably decrease the value of what of the government treasuries, which will increase the cost of borrowing. So that is one of the effects that we may see on in the market, right? Um, then I noticed something here. Let me see if I can find it. Um, I think one of the problems is also politically, right? So the U.S. or the war is very unpopular among Americans. Even the perception of Israel has been um,
Damage.
incredibly decreased, right? It
Mm.
is amazing how the amount of people that is younger than 50 years old has a disapproval of the U.S. I don't know. I mean, they separate government and country, but the reputation of the country has been severely damaged, I think, within the U.S. Right. On the other hand, also, what I wanted to mention when it comes to the treasuries is that in terms of crisis, still they seem to be a safe haven, right? There may be a demand for treasuries, for government treasuries, when there is some uncertainty about the global economy. Now, so we have those two forces, right? Is it that people may expect that inflation may grow up, in which case I will have a lower demand for treasuries. On the other hand, if in terms of uncertainty, I may believe that treasuries are a good asset to have, right? So at this point, I think what is prevailing is probably the effect of inflation. I think what I saw in the recent reports is that the treasuries, the yield are going down over the next 10 years. So that may be one of the expectations that we see. Um, and then, as I said, politically, that is one of the issues, right? The war is unpopular. People perceive that immediately. The reputation of Israel is not very it's severely affected. And I think also the president and the administration are being very careful in trying to tie their political assets to Israel, right? Especially not many people like the recent actions.
Mm. So it is interesting how you can get a divergence of America's political reputation and its economic reputation. What you're saying is, as an economist, that those two things can diverge and run parallel or divergent to each other. One doesn't necessarily affect the other, at least in the short term.
Yeah, I think so. And it's one of the things is because there is no alternative to the dollar. That's probably one of the the main reason, right? We don't find a serious competitor to the dollar yet, and that's why I think the U.S. Um, prevailing currency in the war is still very strong.
Eduardo Escalante, thank you very much indeed.
Well, thank you very much, Tanya. It's a pleasure always.